2020 hogs, more supply, profitable prices. The USDA's December Hogs and Pigs report indicates that producers continue to expand. The December 1st inventory of all hogs and pigs came in at over 77 million head, a record for this quarter and up 3% from a year ago. The U.S. hog industry has been expanding since mid-2014, with the annual breeding herd growth rate peaking at around 3.5% in early 2018. Unprofitable margins and uncertainties from trade tariffs have slowed breeding herd expansion, as the USDA's December report has the breeding and market herds up just 2 and 3% respectively from this time last year. And these numbers are fairly in line with pre-report expectations. The number of pigs weighing less than 180 pounds was 2.25% larger than the inventory at this time a year ago, and these will be the market hogs arriving at processing plants from January to May. The change reflects that the September to November pig crop was up 2% from 2018, despite 1% fewer sows farrowed during the period. The 2% larger pig crop last fall also implies roughly 2% more slaughter this spring. That larger pig crop is due to a record high of 11.09 pigs safe per litter on average, or a little better than 1 pig per litter more than last year's 10.76 for the September to November period. The 2019 average was 10.97 pigs per litter compared to 10.68 in 2018, continuing the upward trend with an average rate of annual increase of 1.3% over the last decade. A continuation of the upward trend in pigs per litter combined with reported farrowing intentions suggests more hogs going to market in 2020. Winter farrowing intentions are up 1% from actual farrowings last year and 5% from 2 years ago, and spring farrowing intentions are also up slightly from last year and up 3% from 2 years back. All these numbers point to a somewhat higher supply of hogs and pork in 2020. With higher production, one might expect lower prices, but there are additional items to consider on the demand side. Domestically, U.S. per capita pork consumption was under 50 pounds per year from 2010 through 2015, just surpassing 50 pounds in 2016 through 2018, and estimated at 52.7 pounds in 2019, or the highest it has been since it was 54.2 pounds in 1981. While pork production is expected to be 3.5% higher in 2020, consumption is expected to maintain close to that 2019 estimate, and we still have exports to consider. On the world market, all eyes are on Asia, and China in particular, due to their production losses from African swine fever. Although held back by China's retaliatory duties, U.S. pork exports to China increased throughout 2019. In September and October, China surpassed Japan to become our second largest foreign customer after Mexico. Late last May, Mexico entered a 20% retaliatory duty on U.S. pork that restrained exports through April. The House of Representatives passed the U.S.-Mexico-Canada agreement in December, and the Senate is expected to ratify it this year, which will help to ensure long-term duty-free access to this key market. Hence, the USDA is forecasting U.S. pork exports in the first 3 quarters of 2020 to be respectively 21%, 7.5%, and 8.8% greater than the same times last year. These forecasts are premised on the assumption that China will continue to face significant domestic pork supply deficits and that the preliminary trade agreement with China will eventually be finalized. Taking all this into account, hog prices should be profitable throughout much of 2020, even though they've been below the cost of production in recent weeks, as they often are seasonally this time of year. Whereas other forecasts you might see consider a base price reported on either a live or carcass basis, the forecast presented here is for the national weighted average net price for all transactions for producer sold, Barrows and Gilts, including negotiated and contract prices. This net price should be more reflective of what producers receive and runs at a premium of more than $2 a hundredweight over the base price on average. So take that into account if comparing with other forecasts. By quarter, the national net price is expected to average around 66 in the first quarter, 77 in the second and third quarters, and then 67 in the final quarter of 2020. A range of $2 higher or lower would be reasonable for price projections. Hence, with cost of production in the low to mid 60s, hog prices should be profitable on average throughout 2020. Now, these projections are based on a scenario where growth in domestic and export pork demand more than offsets growth in U.S. hog production, as previously described. Since domestic production and consumption tend to be relatively easier to get a handle on, export demand from China in particular appears to be the wild card. If the expected growth in U.S. pork exports to China doesn't materialize, then U.S. hog prices would likely fall short of these projections. For the University of Illinois and Western Illinois University, I'm Jason Franken.